Hi traders, welcome to episode 6 of the Order Flow in 60 Minutes series. It's time to talk about big trades bubbles, a favorite indicator among order flow traders. It helps us spot big bid and ask orders in the market and understand how these orders influence price movement so we can align with the right market direction. In the first video, we said every episode answers 4 questions. Where is the best place to trade? What mode is the market in right now? Who is pushing the move? How do we confirm the entry? In episode 5, we covered footprint as the execution confirmation tool. Today is episode 6, and we go one level deeper into execution, big trades. How big orders can influence the market, and how to read reversal versus continuation using the big trades bubble. What are big trades? A big trade is a concentrated, aggressive market order where buyers or sellers show strong conviction in a short period of time. In Hameral, we represent them as bubbles. The bigger the bubble, the bigger the orders are. There are different types of big orders used in trading strategies. For example, some strategies compare big bid and big ask activity. And if they see a significant number of orders hitting the bid or the ask, they interpret this as aggressive selling or buying. There are also strategies that use big bid or big ask orders across multiple levels. For example, across 3 levels, revealing the lifting of the offer, for example. Some strategies consider big orders as the total volume at a price level, bid plus ask, when it is unusually large compared to normal. Other strategies focus only on big orders appearing on the tape as a single print, considering this a sign that it may be part of a large single trade. All these modes are available in the Hameral Big Trades Bubble Indicator. In today's video, we will use as an example big trades executed on the bid or the ask in a short period of time. In the chart, we can see 2 types of bubble. Bid bubble, purple, are aggressive sellers hitting the bid. Ask bubble, green, are aggressive buyers lifting. The ask important. A bubble is not a trade signal by itself. Its meaning comes from context plus reaction. Why do we use big trades? We use big trades because they help us see absorption, aggression happening, but price won't move. Exhaustion or traps, late buyers or sellers getting stuck. Real breakouts, aggression confirming the push through a level. Big trades are basically a spotlight on the moments where the market is making a decision. Where do we use the big trades bubbles? A bubble's meaning is derived entirely from its context. So we tried to explain their use within one of these 4 contexts. Which are the most common? Of course, there are many strategies, and some of them may use big trade bubbles differently depending on their rules. But most often, we are interested in big trade bubbles like this, at key levels like support or resistance. During a trend, especially at pullbacks and continuations, at a breakout, we see the pushing through a level in the middle of a range. Just observe the bubbles. It's better not to make decisions there. If you remember only one thing from this video, remember this: location first, then aggression, then confirmation. How do most strategies use big trade bubbles? Pattern 1, bid bubble. Purple in our case, at support. That usually means absorption, and it is a bullish reversal clue. Sellers hit the bid aggressively, trying to break support, but the level holds, so a clear absorption. But not all the bid bubbles at the support are the best. What we want to see: rejection, wick at the low, candle closes above the bubble, repeated failed attempts to go lower. Every time the price go on the bubble area, it rejects bullish follow through on the next candle. We see a nice bullish candle closing above the previous close. How most strategies trade it. We don't buy the bubble itself. We wait for confirmation, the price holds, and we see a bullish follow through. Then we look for targets at the next key zone, like previous value, HVN, VWAP, area, etc. Pattern 2, ask bubble, in our case green, at support. That means the buyers step in and we have a bullish continuation move from pullback. Core meaning, buyers lift the ask aggressively on the dip, initiating longs near the bottom. What we want to see, immediate bounce after the bubble. Higher low formation, strong bullish candle after the bubble, which means momentum continuation. How most strategies trade it. If the trend context is bullish, this becomes a clean pullback defense confirmation. Entry logic is based on follow-through, not the bubble alone. Pattern 3, ask bubble, green in our case, at resistance. That means late buyers are trapped and we can expect a bearish fade or reversal clue. Core, meaning buyers lift the ask into the highs, often late or trapped. What we want to see, price stalls, or goes sideways at resistance. Long upper wick showing rejection. Big bubble on the top of the candle. Candle closes below the bubble. No follow through after the bubble. Immediate rejection candle. How do most strategies trade it? They treat it as a caution signal for longs. If price rejects, it can become a short idea back into the range, toward value. Pattern 4, bid, bubble, purple, at resistance. The sellers defend early and it is a sign of bearish continuation or reversal. The core meaning is this. Aggressive sellers step in early and defend the level hard. What to watch? Immediate drop from the level. Strong bearish close. Clean supply zone holding. How most strategies trade it. Same rule, we don't enter blindly. We wait for the rejection and follow through, then look for continuation lower, when a bubble is not a signal. This is a very important subject. We don't trade or jump on every bubble. A bubble appearing in the middle of a range, far from support or resistance, usually signals buyer-seller balance, not a directional edge. Key rule from the playbook, if there is no follow-through, ignore it. There are also exceptions. A big trade bubble becomes meaningful only if it aligns with another key level, like VWAP or a high-volume nod. How do we detect breakouts using big trades bubbles? On a breakout confirmation. Ask bubble on a big bullish candle. Breaking resistance can confirm real buyer aggression. Bid bubble on a big bearish candle. Breaking support can confirm real seller aggression. What to watch for both? We need the bubble in strong big candles that is breaking the level. The candle is not having wicks, and the next candle to go in the breakout direction, based on the discussed scenarios here, is a simple checklist to read the big trades bubbles. Before acting on any bubble, confirm the context by answering these 4 questions. Location. Where did it form? At support, resistance, or in the middle of a range? Aggression. What does the color signal? Purple means seller aggression. Green means buyer aggression. Confirmation. Does price action validate it? For reversal, do we see long wicks on candles and the bubble is placed on the wick? Is the next candle supporting this move? For breakout, do we see the bubble on a big impulsive candle that is breaking the level? Is the next candle following the intention? Trend. Does it align with the bigger market trend? Is it a continuation or high probability reversal? If you don't have the big trades bubble indicator yet, you can find it in the Hameral shop. It comes with all 4 calculation methods explained at the beginning. On top of that, it's extremely customizable, so you can filter big trades exactly how you want. Get the link in the description. Mini homework, analyze the last trading session and observe for each bubble. Location, aggression, confirmation. What story are the big trades telling? Reversal or continuation? In the next episode, we put it all together. Order flow A to Z. A full workflow from context to execution. Thank you for watching. See you in the next video.